Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss the number one complaint about Fidelity Solo 401k and how to fix it. Now, we're going to start out with the questions or topics that you brought. Thank you so much for bringing those questions and topics, at least those ones that have been teed up. And then we'll turn to today's topic, which again is the number one complaint about Fidelity Solo 401k and how to fix it. If you find this video to be helpful, please like this video as it helps us to get the word out to other self-employed individuals just like you. All right, let's jump in with the questions that were teed up, and then we'll go through the topic. In the meantime, feel free to start to chat over more questions or topics, whether on this topic or other unrelated topics. I'm planning to maximize 2025 Mega Backdoor Roth to Roth IRA contribution. W-2 wage, $70,000, no employee contributions, no employer contributions. I will fund the entire W-2 wage, $70,000 into my solo 401k at Fidelity after tax account, and then immediately move the funds to the Roth IRA also at Fidelity to make sure there's no gain. Besides $70,000, I have about $65,000 in my solo 401k after tax account with Fidelity. The source of it, perhaps Fidelity took some money from my bank account for verification, or $65, and did not send it back. Over the years, it sat in the Fidelity money market and gained distribution. I think I should move 65 along with the 70 together into the Roth IRA. Is there any problem with doing that? No, there's no problem with doing that. You just need to make sure that you let us know about that transfer and let us know about the gain portion, which it sounds like is about $65. So the entire amount will be reportable on a 1099-R for the year for when the transfer occurred, for example, in 2025. The basis will be non-taxable. In other words, the $70,000 contribution, but any gains like the $65 would be taxable for the year of the transfer. And you need to move all the money. Otherwise, you would be deemed to move a pro rata portion of the basis and a pro rata portion of the gain if you move less than all the money. Hopefully that makes sense. How should I report the 1099-R? Are the below correct? Well, if you give us the information, if you complete our online form, we'll prepare the 1099-R. But yes, it would be the gross distribution, the taxable amount. Yes, you've got the idea as far as the different boxes for the 1099-R. But again, we prepare that as an optional free service for our customers, as long as they provide us the information in a timely fashion. With S Corp, you have a business and personal bank account. Are there rules regarding what account should be used for employee and employer? In other words, profit sharing contributions to a solo 401k? That's a great question, JK. And the answer is no. From a solo 401k perspective, it's neutral. In other words, you can make all types of contributions from a personal account or a business account. What's more important from a solo 401k perspective is that the contributions are made within the limits, by the deadlines. They're made to the applicable accounts. For example, pre-tax versus Roth. Now, with that stated, we have seen some feedback, for example, from our clients' accountants who may prefer from an accounting perspective that the employee contribution come from a personal account and the employer contribution come from a business account. But we can't say from a solo 401k perspective that that's required, because it's not. Great questions. Feel free to chat over more questions while we go through today's topic. And again, if you're finding this video to be helpful, please like the video. Please share it with others that might find it useful, as that helps us to get the word out. Okay, let's go through the slides. So as always, the presentation is being provided for educational purposes only. Should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So the problem with Fidelity Solo 401k, which you can think of as the complaint, is that it's very limited. It's a vanilla plan. So it lacks many of the key features, which are the reasons that clients sign up with us. If I were to characterize it, I would say the top complaint is that it doesn't support Mega Backdoor Roth. So that's one of the top reasons that customers sign up with us, is the ability to make Mega Backdoor Roth contributions. So Fidelity's plan doesn't allow for Mega Backdoor Roth contributions, but you can upgrade your plan from Fidelity to our plan and then start to make those Mega Backdoor Roth contributions. So the solution is a self-directed solo 401k like the one offered by my solo 401k Financial. So a self-directed solo 401k plan means that we provide the plan. A 401k plan is really a legal entity. It's the documents that create it. So if you have a vanilla plan from a discount brokerage like Fidelity, then you're not only going to have your account at Fidelity, but they're going to provide the plan documents, which is going to be in their interest. So it's much more vanilla. But at the same time, Fidelity will open up accounts for third-party plans. So in other words, you could get the plan from us, but have your account at Fidelity. And if you already have a solo 401k plan, you could upgrade your plan. So think of it like a cut and paste, where you cut out your Fidelity plan documents, then upgrade it to our plan documents, which are going to allow you to do what you want to do, whether it's the Mega Backdoor Roth or the tax credits or loans or other features. Now, as part of that process, new accounts will need to be established at Fidelity under the name and EIN number of the restated plan. So it's referred to as a restatement when you upgrade the plan. And then the cash and assets can be moved over from the pre-existing account for your basic solo 401k at Fidelity to the new account for the restated plan. So having the custom drafted plan allows for greater flexibility and investment options. Upgrading or restating to a self-directed plan will fix that complaint of not having those features. So Mega Backdoor Roth Solo 401k, just to preview it, is a way for someone to contribute a much higher amount where the funds end up in a Roth account. You could end up in a Roth Solo 401k, or as the question from the first question that was presented, or even to a Roth IRA. So much higher means up to $70,000, for example, for 2025, provided you got the self-employment income to justify it, or even more if you're age 50 or older because of your ability to make catch-up contributions or super catch-up contributions. So just like any type of Roth account, the benefit of a Mega Backdoor Roth Solo 401k is that you got that potential for tax-free growth. So the mechanics are making what they call a voluntary after-tax contribution, step one, and then transferring the funds to either a Roth Solo 401k or a Roth IRA. The prerequisite is not only being eligible to have a solo 401k plan, but also have a solo 401k plan that allows for that two-step process, that allows for the voluntary after-tax contributions and then the subsequent conversion to a Roth account. Now, the basic solo 401k plan at Fidelity, their documents don't allow it. That's why it's the number one complaint. But our plan documents do. You also, of course, want to not only look for a provider who offers a plan that supports the Mega Backdoor Roth Solo 401k, but also look for a provider like us that has deep experience in helping clients through those compliance steps. For example, the two steps that I described, but also provides the compliance support. Because even though that first step, when you make the voluntary after-tax contribution, it's not reportable on the personal or business tax return, the second step, when you move the money from the after-tax account to either the Roth Solo 401k or a Roth IRA, that is reportable on a Form 1099-R. And we prepare that Form 1099-R as an optional free service for our customers. In other words, no additional charge. They just need to let us know about that transfer by completing the online form on our website in a timely fashion. And then we'll handle the 1099-R. Now let's talk about some other top complaints. In other words, some other missing features with respect to Fidelity's vanilla solo 401k plan. Well, another top complaint is the fact that you're limited to the basic brokerage options that Fidelity offers. So with our solo 401k plan, of course, you can still have those same brokerage investment options, whether it's ETFs, publicly traded stocks, mutual funds, certificates of deposit. But our plan also allows for alternative investments. So these are non-traditional assets like real estate. crypto, private equity, pre-IPO stocks, precious metals, etc. A third top complaint would be the fact that Fidelity solo 401k doesn't support loans. So we're talking about solo 401k loans, where the solo 401k owner borrows from their own retirement account and can use the money for any purpose whatsoever. Could be a personal purpose, could be a business purpose. And that withdrawal is not going to be subject to taxes or penalties, provided that it's documented as a 401k loan and then what's within the solo 401k loan limits. So those limits provide that you can borrow up to 50% of the balance, not to exceed $50,000, has to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1%, or it could be a CD rate plus 2%, with those payments spread over a 5-year term. Another missing feature with regards to Fidelity Solo 401k plan is that it doesn't support the tax credits. So setting up our Solo 401k plan, it could be a new Solo 401k plan or upgrading an existing plan like a Fidelity Solo 401k basic plan to our plan will make the self-employed business eligible to claim $1,500 in Solo 401k tax credits. So that's $500 per year for 3 consecutive years. So we automatically include that for all new plans, whether it's a brand new plan or a new plan to us, meaning a restatement. That's going to more than cover our fees for the first 7 years, because we charge $650 as the initial cost. That includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. That's a totally flat fee, covers all these features that we've been discussing for no additional charge as optional free services, in other words. So next on our list of top complaints with regards to Fidelity Solo 401k is the lack of 5500EZ support. So what is the 5500EZ? It's an informational tax return. So in other words, you don't have to pay taxes, but you've got to provide information about your Solo 401k plan once the value of the plan exceeds $250,000. Now, in calculating whether that $250,000 threshold has been met, you would need to include the value of any defined benefit plan, if any, that the self-employed individual also has. So we handle that. We prepare the 5500EZ, including filing the 5500EZ via the electronic filing system as an optional free service for our customers. In other words, no additional charge. Customers just have to let us know once the value exceeds the threshold. In-plan Roth conversion and employer Roth. So these are additional ways to add funds to your Roth account where you've got that potential for tax-free growth. But you need to have a plan that allows for it. You need to have a plan that allows for in-plan Roth conversions. So that's a Roth rollover where you're taking pre-tax money that's already in your Solo 401k plan and you're converting it inside the plan to a Roth Solo 401k. So that conversion is going to be taxable. It's going to be reportable for the year of the transfer. But then going forward, you have that potential for tax-free growth. So not only does our plan allow for in-plan Roth conversions, but we also provide the ongoing compliance support as an optional free service. So for example, when you move the money from the pre-tax account to the Roth account, that's going to be reportable for the year of the conversion on a Form 1099-R. And we prepare that as an optional free service for our customers. In addition, our plan will allow for employer contributions to be made as Roth contributions. So this is a new ability provided that you have a plan that allows it, new per Secure Act 2.0. So historically, employer contributions were always just made as pre-tax contributions. But given all the Rothification that came about as a result of Secure Act 2.0, now employer contributions can be made as Roth contributions if you have a plan that allows it. Fidelity's Solo 401k plan, their basic plan doesn't allow it. Our plan does. Checkbook control. So with our Solo 401k plan, you can have your account at Fidelity and we'll help you open up the new account. It would need to be a new account. Then we'll help you with the transfer of the cash and assets from the pre-existing account for your basic Solo 401k at Fidelity to the new account at Fidelity. that's opened up for the restated plan. But in addition, you can have accounts at other places, whether it's at a bank, a credit union, other brokerages, cryptocurrency exchanges. So those accounts can facilitate alternative investments. For example, if you want to invest in crypto, or let's say you want to invest in real estate based on experience, based on client feedback. A lot of customers that want to invest in those types of alternative investments will want to have a bank account. And you can have both, right? You could have a brokerage account at Fidelity plus a bank account. Giving the bank account is going to give you the checkbook control. Now, Fidelity will issue a checkbook with respect to their brokerage account that's opened up for the third-party plan. But for those alternative investors that are maybe doing a high volume of alternative investments, they may also want other features like access to certified bank checks, ACH, the debit card access, above and beyond what Fidelity's brokerage account offers. So having that checkbook control will allow the individual to be able to act quickly on alternative investment opportunities. So again, you got that flexibility to open up accounts at different brokerages in addition to Fidelity, as well as the fact that we've helped customers open up accounts at hundreds of different banks and credit unions for their solo 401k plan that they have through us. Another differentiation, another complaint perhaps about Fidelity's solo 401k is that when it comes to making employer contributions in a scenario where there's multiple participants in the solo 401k, let's assume you got a husband and wife that are both working in the same self-employed business, both participating in the same solo 401k plan. So under Fidelity's plan documents, if those individuals want to make employer contributions, it needs to be in the same percentage. Not necessarily the same amount because it's always a function of the self-employment income, but at least the same percentage, right? Each spouse would have to contribute 10% or 25%, right? That's the cap, for example, for a self-employed business that's taxed as an S Corp or a C Corp. It's 25% of your W-2 wages. But the point is that it needs to be the same percentage per Fidelity's plan documents. That's something that's mandated under their plan documents. Whereas with our solo 401k plan, our plan allows for customization. It allows for different contribution percentages, right? So if one spouse wants to contribute 10% and the other spouse doesn't want to contribute any employer contributions, that's okay. Our plan would allow it, whereas Fidelity's plan would not. Okay, wonderful. That takes us to the end of the slides that we wanted to share today. Let us know if you have any questions about these topics or even unrelated topics. We'll turn to some of the questions that came through while I was going through the slides. Again, if you found it to be helpful, if you're finding this to be helpful, please like this video. Please share with others. We also invite you to subscribe. We do go live every single day. We go live on X. We go live on LinkedIn. We go live on YouTube. We go live on Instagram. So if you subscribe, you'll get notifications of when we go live. You can jump on. You can hear the topics that we like to share, come and ask questions. So there's a lot of great ways to learn and to share the knowledge. What is the Fidelity form to move the fund from the solo 401k after tax to rollover Roth IRA? So we have a procedure page on our website. Let me tag your email here. And afterwards, I'll send you over the procedure page. Thank you for the good question. I see you there. Okay. Thank you for the good question. How is the 3% auto contribution calculated? So in order to be eligible, that's a great question. In order to be eligible to claim those $1,500 in solo 401k tax credits, you need to have a solo 401k plan like our plan that includes the automatic contribution feature. Now that feature will establish a default 3% contribution percentage. To your question, it's 3% of the compensation that the individual receives. But please note that the participant, meaning the solo 401k owner, as the participant, has the right to opt out of the default 3% amount, which is what the vast majority of our customers do, because doing that then enables them to make contributions in whichever amount or schedule they prefer. So that doesn't mean that they're not eligible to claim the credit, because the only prerequisite is that you have a plan that includes the automatic contribution feature. Just because the participant, meaning the solo 401k owner, exercised their right to opt out of the default, doesn't mean that the feature was not included in the plan. It was, and therefore the business, the self-employed business, is eligible to claim the credit. How do we notify you about the transactions that need IRS form submissions? So there's a form in a forums page on our website that you can access easily at mysolo401k.net/forums. That's how we capture the information. It can be submitted 24/7. I just set up an account last night. Want to do Roth. Appreciate the help. So I'll also tag your email here. Well, actually, you're coming in through a different channel. So you should have received, if you submitted the application and made payment, you will receive an email no later than today with a link to our secure portal where you can download the documents that were drafted specifically for your self-employed business. There will also be an upload link in that email where you can then upload the completed and signed pages. And there's going to be a third link in that email where you choose where you want to have the account at. And it's a quick 1-minute questionnaire. For example, you choose Fidelity or you choose Schwab. And also from the drop-down menu, you can indicate whether you want to have Roth accounts or Mega Backdoor Roth accounts. And that'll prompt us to prepare the paperwork to open up the requisite number of accounts. Thank you so much for your business. We do appreciate it. Well, let us know if there's any more questions. In the meantime, thank you so much for the wonderful, wonderful participation. While we're waiting to see if any more questions trickle in, we invite you to our community. We have the largest community of self-directed investors, solopreneurs around the solo 401k topic. There's over 30,000 members. So that means there's vibrant forums. There's a video catalog, the video library of webinars, videos. So there's tons of ways to learn, tons of ways to share the knowledge. You will try to look it up based on your name. Looks like you're coming in through email. I should say, look like you're coming in through YouTube. I see that question from Scott Tracy. We'll try to look up your name in our system and see if we can track down your email. All right. Well, until next time, everyone, thanks again. We'll follow up on these 2 items. Okay, if you want to send an email to support@mysolo401k.net, and then we can pull up your account and respond specifically. Thank you so much. Until next time, everyone, thank you so much.